During the first half of this year, few groups performed better than the real estate investment trusts, as investors flocked to consistent, high-yielding stocks as an alternative to the incredibly low-yielding bonds. But as the REIT rally run its course, since the beginning of August, the group has stalled. And if you have to wonder if we're looking at a viable pullback or maybe something real rotation here, look at a company like EPR Properties, which owns entertainment, recreation, and education-related real estate. Think megaplex movie theaters, retail centers, golf complexes. Boy, is that hot. Ski parks, charter schools, even a casino on the way. It's an eclectic mix, but for the most part of the year, boy, that mix has been working. While the stock has pulled back roughly $5 from its highs at the end of July, EPR has given us an astounding 35% year-to-date, including a 20% plus gain since we spoke to the CEO just at the end of April. And the stock still has a 4.9% bountiful yield. Let's take a closer look at Greg Silvers, the president and CEO of EPR Properties. Hear more about what's next for the company. Mr. Silvers, welcome back to Mad Money.
Thank you,
Good to see you.
Good to see you.
You know, I got to tell you, Greg, if you had told me when I got in this business that there could be a real estate investment trust that would have the level of growth as this, because we almost always thought that they were just slow growing, I would say, no, it won't be a REIT. It'll be just a growth stock. What is the advantage of being a real estate investment trust, given the kind of tremendous growth you have?
Well, I think for us, it's really about being able to access this product, to grow a portfolio, to take advantage of a low interest rate environment, to capture spreads and deliver consistent, durable dividends that are becoming more and more valuable in this environment.
Well, that's why that's true. It's the environment that also could be driving the stock. Now, a lot of people might think, well, wait a second, entertainment, recreation, what do these have to do with each other? But you have a great slide in your presentation. It's the experience evolution, and you're the way to play it. So it's probably, what, more than 70% of your, about 71% of your business is just that.
Yeah, it's truly about the idea that the economy is moving a little bit from an economy of stuff to an economy of experience. Right. Something that we can have a communal experience, generally often with food and beverage as a component part of that, so an activity-based. But we all still want to be together. We're not going to hang out just in our house, and we're able to take advantage of that without being really internet sensitive, as some other sectors are.
Well, let's talk about the entertainment and having experience. I like to go to theaters that basically have been reseated. That's an important part for you. Reseated, meaning R-E-S-E-A-T-I-N-G, right?
Yes, because what we're seeing right now is really the amenitization of what's going on. We have 25 theaters currently right now. They're in some plan of reseating with introducing the luxury fully reclining seats with expanded food and beverage. It's really expanded the demographic. It's kind of brought what we believe is customers see real value in going back, because most of these are occurring without ticket increases. So people are able to come, have a much better experience. They're generally spending more on food and beverage, which works for the operator. So it's a very much of a win-win scenario.
There's a lot of consolidation in the business. Does that hurt or help you?
For us, we see it as positive in the sense, if you think about what's going on with this reseating, the number of seats in the U.S. are actually going dramatically down.
Right.
So those of us who have those seats are actually, our properties are actually becoming more valuable. So as we see this consolidation, what we're seeing is what we believe is more opportunity for us to come in, participate in that reseating formula and grow our business.
Okay, now if we have the millennial experience evolution, which I like, but you also have education, charter schools. How does that fit in with a company that's experiential?
Well, for us, again, think about it as one of those non-internet directly competitive. Right. This is something you have to be in-person experience for the most part. So we see this as a specialty asset, that it's not, we try to stay out of the commodity flow of things to where we can access product. We know how to have we're segmented in 3 areas. We have people who live, eat, and breathe it every day. So we have a very specialty focus, so we understand how to underwrite it, how to access it, and how to deliver these consistent, durable returns.
Now, in the time since we've been following the company, you had a patch of land that turned out to be bountiful and a casino being built. I mean, that would seem to be one of those situations where it's been a total windfall. But does it fit with the core mission?
Probably gaming not. There's some people who actually focus on that, but what we did was wanted to make a land investment productive. So we ground leased the property to a gaming entity. They're going to spend $600, $700, $800 million on top of our ground. But then we're also adding a water park hotel that's part of our recreation segment to it. So it's a win-win. We activate what was a dormant asset, get a very positive return, and we're also able to do what is more of our core the remaining part of the property.
Okay, one last question, and I know it's a little more complex than I usually ask on the show, but because I care so much about your cash flow and therefore raising dividend, you do have a piece of what's known as a convertible preferred. And if your stock trades up, it would seem to me that you might be able to liquidate that preferred and really save a fortune for shareholders.
Yeah, for us, we're very much watching that. If you haven't noticed, we now have started posting to our website kind of what the conversion is.
That's why I wanted people, I figured if they go to the website, they're going to see that. That's why I had to bring it up.
Absolutely. So we're monitoring it, and we feel very strongly that given when the opportunity presents itself to convert, we'll take advantage of that, both for our benefit and for our shareholders.
I have to admit, that's been a great piece of
paper.
Yeah,
it has been.
All right. That's Greg Silvers, President and CEO of EPR Properties, which is one of the hottest stocks out there, but also has a great yield. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.